What's up everybody, welcome back to my channel, Earn It, Save and Invest It. Now this is my week 7 of my road to $100,000 or my 100K challenge. Now this week has been a little bit muted, no big moves up, no big moves down, but I'm gonna go over where my positions are, where my portfolio is, what I plan on doing, what I did this week, and where I think the stock market is gonna go. So let's just quickly break it down. If you do like these videos, please give it a like and subscribe. It helps a lot with the algorithm, and let's just break this down quick. So as you can see on my road to $100,000, I am at $8,063.64. Now, as usual, HIMS is at the top of the list in terms of weight, right? It's at almost, it's a little bit over 31%. My value is $2,500 and I'm up 138%. Now, if you do remember, I was up basically I think 200% on this. But it dropped very severely a few weeks ago. But the fact that I'm still carrying this position on, positively in profits, and just like I said, I know it dropped really severely in that very beginning, that first day, and it just continued to go up since then. That's kind of what I thought was going to happen for HIMS. TQQQ is a stock I might have to go over on the chart, but it's looking a little interesting. It hasn't done a whole lot this week. It went up a little bit, as you can see, about 3.62%. But the stock market's kind of been up and down with the whole Jerome Powell and Trump stuff. And, so the TQQQ, it tracks the Qs, QQQ, and it's essentially the NASDAQ, right? So it's been kind of up and down, but I eked out a little bit of a gain on that week. Then I got Nike, Celsius, Meta, Fubo, Amazon, EA, and SMCI. The big move for me that I'm planning on probably doing is selling SMCI. There's some stuff I got. I'll go into it a little bit later. But first, I'm actually going to go over where I stand on my challenge, right? It's week 7, and if I calculated it all out, or I had ChatGPT do it, but if I take my $7,354 and I put in $50 a week, and I gain, I think it was 20% compounding annual interest, and over the next 10 years, that should equal $100,000, right? So $7,300 plus $50 a month at 20% compounding interest a year for 10 years is $100,000. Now I do plan on beating the 20%. It's going to be kind of difficult, but if I can find a couple big bang winners and then still have other good stocks that know how to perform, they perform well still. If I can get some stocks that perform between 12 to 16%, and then I find some that perform at like a 25 to 30% over the next 3 to 4 years, because HIMS, I'm at 138% right now. It could be at 200% and by the end of the year. So just in that itself is a tremendous boost. Now that is 200% on that position in total, but it's not the percentage gain that I have had since the 2nd of June. So, and that's when I started this challenge. So it is a little bit kind of a different way of looking at it, right? It's not like I started this challenge right when I started at 0 with this account, and I already had positions a little bit built. So that is a little bit of the difference, is that I was walking into this, I was coming into this challenge with some of my positions already at a huge gain, right? I already had 100% on a couple of my positions. I had 50% on a couple of my positions. So in order for me to continue to make gains on those, even from right, I have to figure out a way to make that happen. So, but right now, as you can see, week 7, I should have $7,890.43. If I do that calculation, I'm currently at $8,063.64. So I am currently beating my goal right now. As you can see, from week 3 to week 4, I took a dip, and that was when HIMS took a big dip. There's going to be times where I go down. There's going to be times where I jump way up. I'm not going to get excited or emotional either way. I just have to stay consistent and stable and just do my thing and just make sure I do the right research. So over the last week, my portfolio started at $7,862. I put in the $50 that I do every week. My investments went up $151, so now I'm at $8,063. As you can see, compared to the indexes, I've gone up 1.92% in the last week. And the other ones, the only one that's even come close is the NASDAQ at 1.51. The Dow is actually negative. Very, very, very little, 0.05, but still it is negative. So I am outbeating all the indexes just over the last week, though. Not a big deal. And as you can see from when I started this challenge on June 2nd, I've gained $359 just from my investments. I've also put in $350. So starting at $7,354, I put in $350. And my investments went up $350 about, so that puts me at $8,063. Now, my portfolio compared to the other indexes, I'm actually underperforming them over my first 7 weeks. That is him's fault. Sorry, Hims, but it is all your fault. But that's the case right now. I'm at 4.81%, while everything is at an 8.6, a 6.7, a 9.4, and a 5.1. The Dow is the lowest, and they are beating me by about 0.3%. I can do better, but at the same time, as you see on this chart, I took a huge dip down that made me have to play catch up over the next couple weeks. Now, Hims has gone up and down. Hims is going to be very volatile, but I do believe at the end of the day, or at the end of the week, at the end of the year, at the end of this challenge, Hims will accelerate and grow a lot more than the average stock, than the index. So I think over time, it's going to be just fine. I'm going to do just great. I'm going to be just fine. But there's going to be these short term. And even with this, right, even over this time frame, right, the 4.1, I'm actually behind the indexes. I am still on track to do what I need to do in order to make that 20% per year. Now, I need to make this very clear that when there is a correction, then there will be a correction, that there's going to be parts of my portfolio that feel it harder with the Hims, the Fubo, the Celsius. If there's certain corrections that hit, I'm going to see a massive hit. But when those corrections really hit and we have a crash, I will be deploying more cash. I will be figuring out a way to get more cash in there and buying more stocks. So yes, my $50 a week, maybe during a big crash, I spend $200 in a week or $200 over the course of 2 weeks, and then I just don't make a deposit over the next 2 weeks. I might do something like that. But I definitely and I plan on taking advantage of dips and drops, crashes, corrections, because ever since I have started this challenge, we've been nothing but going up. It's just been going up. We've had a little bit of a dip here and there, but you can see the index has never really had a dip. I had a dip from Hims, but that's it. So, it is what it is. The first stock I actually want to go over is Fubo. It is one that I am investing in more. I am buying shares. I'm building my position on it. I want to have at least $700 to $1,000 invested into Fubo. Obviously, if I'm just putting in $50 a week, that's it takes longer to do. But I already have some shares. I have about like 120, something like that, shares. Or maybe it's 150 now, 150 around there. And I plan to move it to at least, like I said, 300. Somewhere around there. That would get me about 1,000, maybe a little bit less than 300, but I want to have about that much in Fubo. As you can see here, its forward PE is only 22. Its market cap is just over $1 billion, which I think, when you're looking at finding a company, finding a stock that's going to grow fast, right? Like an Amazon and an Nvidia now, right? It's already done its growing. So not that it's not going to continue to grow, but it's just not going to grow at that same pace, right? The stock price is not going to grow at that same pace. If I were to buy an Amazon or a Meta or a Google or a Tesla, all these stocks that they've gone through their big growth stages, a really huge one, I don't see big booms happening. I do see safety. I do see value. I see quality, but not necessarily do I see the high risk, high reward. I see value, right? So Fubo is where I do see a high risk, high reward, but I don't even want to say a high risk. I mean, it's any stock that is $1 billion, right? The company's $1 billion or so. The stock is trading at under $5. It definitely is more of a risk. But here's something that really kind of blew my mind the other day. I was actually trying to find, I wanted to do a video about the best stocks to buy for under $5. Then I had to kind of change it to $10. Okay, best stocks to buy into $10. And I started really realizing there's not a lot of high quality stocks out there for even less than $50. There really isn't. Now there's some out there that you can get, but a lot of stocks now are $50 to $100 on average. The good ones. And if you're going to buy something that's under $25, under $10, there's so many that I saw that looked very high risk. You know, losing money. The revenue, their growth rates weren't even that good. You know, the income, like I said, they weren't a profitable company. The cash flows weren't right. Their assets to liability ratio, there's just all these things that just didn't match correctly. And then I look at Fubo. It's a $3 stock, profitable, growing. The asset to debt ratio is great. Not amazing, but it's so much better than these other stocks. And they have a massive potential deal coming up in 6 months to a year. I mean, it's just a little strange, but it puts a little bit more confidence that Fubo is going to perform very well. Just because I feel like this company is a quality company, and I think what they're about to do, merging with Hulu and Disney, is going to legitimize who Fubo is and what they do. If you don't know what Fubo is and what they do, it's a streaming software essentially, right? You download their app and all that, and it's on a TV or your phone and iPad, all that stuff, and you can watch live news, you can watch sports, I think you can watch movies and stuff there too, but it's all about live. From what I know, mostly is live news and live sports. Now I work in live sports. I work at Fox Sports, so I see Fubo a lot. And one of the things that I have seen is that you can do a multi-game screen, right? You can have 4 games on at the same time, and you put your TV screen, your computer screen, your tablet, whatever, and you and you put it in 4 boxes, right? And you can see 4 games at once. That is a technology that is awesome. We use it all the time where I work. We have 20 games on, and so we have 2 screens. Each of them have 9. It's divided into 9 games on the one screen, and we have 2 screens, so we have 18 games all at once. And then we have other games on other TVs and stuff like that. But the point is like that kind of technology, that kind of accessibility is very awesome and amazing. And if they're able to push live sports and live news in a way where you can watch it and customize it in that way, I think that that's huge. I also do think live sports is one of the markets that's really people want to tap into, and I fully understand. Think about how many movies you have watched at home where you've had to see a commercial. Now, if you've watched Amazon movies lately, it might really get you upset. It's pissed me off too, because I paid a long time ago for Prime Video, never had commercials, and now all of a sudden I'm having advertisements, right, in the last 6 months or so. That might happen. If you have Netflix with the ads, okay. But a lot of us, when you pay for an Apple Plus or a Netflix and all this, right, you're not getting advertisements. You're not getting commercials. Tell me the last time you watched a live sporting event and didn't see an advertisement. Never. When was the last time? Unless you are recording them and you're fast forwarding, but a lot of the times, live sporting events and news are live. You have to watch it in the moment. It's on in the sports bar. It's on in your house. It's on, with your friend at the party, or it's over here, right at the bar, all this. So it's like that market is very, when it comes to advertising to people in the moment, that is huge, because you can't do it as much anymore. So I do believe Fubo has a really good business. I do believe that it's going to just continue to grow, and especially after their big merger with Disney and Hulu, I think it's just going to explode. I don't even have to think it's going to explode. I know it will. They've put out numbers in their earnings reports and all that, showing exactly what's going to happen, and it's going to be great for the business. That's all I can say. This analyst puts at the, they talk about Fubo and they have it as a buy. And so I'm going to kind of go over what they talk about. And one of the big things that they do talk about is it says buried in the fine print of the SEC filings is a safety net worth over $275 million that protects a company's balance sheet in the most likely deal fail scenario. Now what they're talking about is essentially there's a deal, right, for Fubo and then Disney and Hulu. The government can get involved and say, hey, no, this is, you guys are building a monopoly type of thing, right? We don't want you guys to do this. And then the deal falls through and they actually don't even, merge. If that happens, Fubo ends up with a safety net of about $275 million, right? If the deal doesn't go through, they're actually gaining. They actually gain if it doesn't go through immediately. Obviously, long term, no. But if it doesn't go through, it's not like it's just outright loss, right? It says while the regulatory threat is real, the merger agreement is structured to financially reward Fubo TV if the deal is blocked on these very grounds. So it's like even if it doesn't go through, they still get money. It says, after carefully going through the SEC documents, I found a critical, under-discussed detail that material changed the narrative. Fubo is entitled to a non-dilutive cash payout of $130 million if this deal is blocked by regulators. That's big. Usually when a deal falls through, it really hurts a company. They've done all this work, they've paid money, they've done all this stuff, and then at the end, they don't have this merger that's going to help them grow and do all that. Well, even if that doesn't go through, they still get paid $130 million. Then Disney will also have to pay $145 million. They have a $145 million debt commitment with Fubo. So in addition to the termination fee, at the time of the signing of this business agreement in January of 2025 this year, they secured a debt commitment with Disney. So as a part of this commitment, Disney will provide $145 million in the form of a senior unsecured term loan to Fubo TV on January 5th, 2026, which is about when they think it's going to actually go through. They say between January and June. So the funds are disclosed and the SEC filing will be used for general corporate purposes. The interesting part is that the funding commitment is not dependent on the closure of the merger, which means if the merger doesn't close, they still get paid they don't get paid, sorry. They have access to $145 million of debt that's at a good rate. It's unsecured. It's an amazing way to have lending and have money. So when you see Fubo, their revenues are just continuing to grow. This is by quarter, and they're just continuing to grow quarter after quarter after quarter. The net income, they have now officially become a net income positive company, which is just amazing, and I absolutely love it. And their earnings per share, again, recently profitable. Now they're at 55 cents a share, whereas before they were losing money per share. So they are now improving on a bunch of their parts of the business. They are now reaching these certain thresholds that I feel is a really good part about being in, a good investment, right? You need to have, you want to be positive. You don't want to have a losing money. You can invest into a company that's losing money, but you want to make sure they have that growth projected so that eventually they'll stop losing money. The net change, this is their cash flow, their net change in cash. As you can see, they were losing some cash. They were making a little bit before in 2022, things got a little rough, but now they're making more money, they're cash flow positive. That's what I like to see. Here's Fubo. This is the last year, and this is the last 5 years, right? Now, Fubo was way up here. It was crazy, right? Crazy in 2020 and 2021. Everyone knows what happened. Then 2022 hit, and then it just completely tanked. And it hasn't, when you look at it, right here is $3.50. It has not grown in the last 3 years. The stock price has not grown in the last 3 years. Fubo has not, it's done some growing. It's done growing in subscribers and all that in the business. But in terms of profitability, they haven't done a whole lot. They haven't done anything big and amazing to wow investors. Well, now they have this Disney deal going to go through. I think eventually, see right here, January is when they officially announced it. And then it bumped up all the way, I think it hit, yes, almost $7. And then it just dropped out. I thought it hit, oh no, that was another stock. So it hits almost $7, and now it's coming back down to earth in the sense of like, okay, the deal has not gone through yet. But if that deal goes through, there's no reason why it should be, valued as the same as it was in May of 2022. There's no reason why it should be valued at that same price. It's going to be a lot more valuable. And if it at all reaches the 20, I'm getting a 6x on my money. 6x on my money right away. That's amazing. 600% on the money, and that's if it gets to 20. Obviously, we've seen it reach 50. These were crazy times. I don't even really want to compare. This is times where the business, no one cared about fundamentals. They only cared about the stock market. So yeah, I do believe Fubo is going to go up. I believe it's going to go up exponentially eventually. It's just going to take a little bit of time because the deal doesn't go through just yet. One stock I did want to talk about really quick that I'm just going to admit now I made a mistake is going to be SMCI. Super Microcomputer Inc. I know they're in the semiconductor business. They build data centers. They do all this stuff. I just did not do my research good enough. I was reading an article. I looked up some numbers. I don't know what I did, what I saw to make me really dig into it and just buy it. I only bought one. But as I started digging deeper into it, I really started to pull it back a little bit. I'm like, okay, hold on. I'm going over the quarters, and they're starting to now go down a little bit in the revenues. Now, granted, it's just been the last 2 quarters, but that is a significant drop. I don't like that drop. I want a company that's growing, obviously. Their net income has dropped significantly. As you can see, even from a year ago, it was a lot higher. So their net income is just not growing anymore. And again, this is just 1 quarter. That doesn't mean anything, essentially. You can look at June 2023 into September 2023, how they dropped, and then they went way up, right? You can look at June 2024, right? That's a big drop significantly from March 2024, and then they went up. But there's a couple other, numbers. Their margin is horrible in the terms of it's not expanding. Their margin is actually shrinking. They were at 15 to 20%. I think it was 6 to 8 quarters ago, and now they're at 9. I don't like those numbers. The company might grow, all these things they might grow, but I'm just starting to feel like, you know what? You have to admit when you're wrong, take the loss, take the L. Fold, just like the hands. You got to know when to hold them, know when to fold them. And I think I'm going to fold my hand on SMCI. I think I'm going to put that money into something else. I might even just put that money into Fubo because I do feel like SMCI is not going to grow 5x. I do believe Fubo will. I do believe Fubo will grow 5x to 10x eventually. It's just going to take a couple years. This time next year, it might be 3x to 5x of what it is today. Then another 2 years, or another year from there, it might be 10x of what it is today, right? So it only 2x'd from where it was next year, but ultimately 10x from where it is today. Who knows exactly what's going to happen, but I do have confidence in Fubo. I do have confidence in the stock. I have confidence in the business and their numbers. So that's it for today. That's it for this episode. Thank you for watching. If you are at all watching still, thank you. Thank you so much. Please hit a like and subscribe. I really appreciate it. I'm doing this whole, this challenge because, I've been doing this for a little while, trading stocks and bouncing here and there, but I haven't done a huge, big commitment like this. I need to be on track of it more because whenever I did, I had these periods where I did and I was doing so well, and then the periods where I fell off, I was doing so bad. And I just want to continuously just be on a good path, hold myself accountable, keep posting these videos. The more I post, the more I research, the more I do. And yeah, I just want to, maybe help motivate some other people out there too. You're around my age, you're younger, and you're like, hey, I want to have $100,000 in a few years, or 5, 10 years, something like that. I want to have $1 million in 20 years or something. You can make it happen. We just have to be consistent, and we have to just do the right thing, right? Warren Buffett said, one of his biggest things about making money in the stock market is to make sure you don't lose money. So if you really make sure you don't lose money first, that's the number one rule. So yeah, anyway, thank you guys again for watching. Please hit a like and subscribe. And yeah, don't forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.